Mm. Okay. Hello, good morning, everyone. Today is Wednesday, March 16th, and we are going to be talking about having Andrew from Tried and True Loans talking about mortgage rate predictions, and then I will be hopping on and I will be showing you guys some little bit more of marketing for your guys' self with Markful and where you can get your gear for your real estate needs. So Andrew, do you want to go ahead and take over?
Yeah, absolutely. So I'm gonna share my screen and I'll jump in just 1 second here. All right, let me know if you can see this screen. Smash that crystal ball. Awesome. And can everyone hear me okay? Hopefully. I'm Andrew Gavin. I run the loan division for Realty Rise for Travis's company. I do a couple of things. I go to a lot of trainings for mortgage, as well as I sit on some compliance calls and things to help us all stay in line with each other. This is a presentation that was presented to me in a group about, I want to say it's maybe 2 weeks old now. All the different information that is collected on this report is probably today, I'd say still less than 60 days old, somewhere around that. So it's very current. It has to do with, our current inventory, rates, inflation. It talks a little bit about Omicron and COVID. And there's just a lot of stuff. And it's a lot, there's going to be a handful of excerpts from different people within the mortgage industry that are talking on different things, their points of view in that specific time and conversation. And so I think in short, this is exactly what it says. It's kind of a slideshow of a crystal ball. And I think when we finished this in our group, the way we talked about it was we came out of it feeling rather positive and positive in a way of the next 12 months are going to be okay. Are they going to be different than they were a year ago, 2 years ago, 4 years ago? Absolutely. But as we go through this thing, we might be in the worst of it right now, today, this quarter. So again, this is based mostly directed towards loan officers. And I'm just going to pop around some of these slides and then talk on top of them, just the stuff that we went over in that meeting and key points. If at the end of this, any of you want a copy of this or more information, you can email me and I'll be happy to share more bits and pieces with you. If anything, this will be a great opportunity for you to get a little bit of insight for things that you guys might not be talking about as often because it's geared towards loans. But let's get started. So we're going to talk, again, we're talking about interest rates, appreciation, inventory. CFPB is our version of the DRE and things that they change. So big thing that they've been talking about, again, when we've already seen this, was existing home sales, inventory loan, inventory being so low, appreciation skyrocketing, prices going up, COVID, Omicron, all these things. Again, this is what's happening right now. And we have Russia and the Ukraine situation. So this is saying Jerome Powell, he is, a big part of the Fed, helps that when this guy talks, when this guy says things about numbers, interest rates change. That's how important this particular guy is, Jerome Powell. So back in March, they were saying that they were probably going to raise rates. And now we've seen that they're up. Today we're probably in the 4s. We look Last year, rates were at 3.07. Today, we're at 4.05. This was 6 weeks ago. So we're over a full point higher on average than we were basically a year ago today. Big issue with the recession, this is back 2008. This is pointing out that since 2008, 2010, we've been our new construction builders have fallen behind and they've never caught up 10 years ago. So that's a big problem. So we have inflation, we have that they're talking about a lot, and they're saying that, inflation right now is higher than it was pre-COVID. The Economic Strategic Research Group is saying that our inflation right now, they projected it's at 7%. I don't know what that means to how it affects our individual lives, but let's just use that as 7 right now. And what they're suggesting is that by the end of the year, it's going to drop to 4%. So whatever you're feeling right now, we're going to see it drop over the next 9 months. So, and they're saying that this does have a lot to do with the Omicron kind of taking care of itself. It seems like, in my opinion, COVID is almost gone. But I did hear this morning that there's a new variant that's attacking some of the Asian countries. So, we might see something again in the future. But the important thing is we're at an inflation rate of 7-8%, and they believe it's going to drop to about half. So this is a quick index about housing. This is probably the most accurate that you could get. Last year, if you look 2020 to 2021, housing prices rose 17.5%. That's nationally. This year, down at the bottom under the red here, they're looking 22.8. So a huge jump, and with inventory the way it is, we're not going to see this change. It's not going to go down much. We might not see 17.5% this year, but we're going to see something. Again, we had a lot of talks about builders and the need for builders and then cost of housing. So this is a quick index. Basically what this says is any number above 50 indicates that new construction builders believe that it's a good time to build. You can see over here throughout the country, all the quadrants believe that it's a good time to be building. And that's because they can, if they can build a house, they're basically building piles of money because someone's going to buy these houses. Because of the new construction effort, there's a lot of new jobs coming out, which is definitely helping the economy. But it's not the end. This to me is a huge joke. So you guys might have seen this if you follow Biden a lot. The administration is talking about creating and selling 100,000 affordable homes over the next 3 years. All right, so let's do the simple math here. Let's cut 100,000 into thirds. So we've got 33,000 of these affordable homes offered nationwide. So that means less than 1,000. If we divide that out by 50, what is that? It's 800 houses per state per year for the next 3 years. So you can imagine what you can do with how many of those opportunities you're going to get here in California if we had 800 affordable houses to sell to our first-time entry-level buyer clients. I mean, this is a marketing joke for Biden more than in anything. This is a quick thing. So back in 1956, home ownership vacancy was at 0.9%. That's the last time that we saw homes this full. Existing inventory being as low as it is here in California, It's incredibly low. Now, different counties are hit worse. San Diego County, which we have like 3 million people. We have 1,500 houses. I know. I believe it's I want to say inland area up north. Their inventory, like San Bernardino area, jumps to over 4,000 homes. Is anyone from San Diego going to move there because there's more houses? Maybe a few, but probably not a lot. Inventory, it's as low as it's ever been since 1973. That's when I was born. I mean, so 50 years ago. All right. This is a big one for you guys. This is an important one for you guys. 4.8 million people will turn 30 this year, or between this year and next year. Our millennial group of buyers is basically turning 30. 30 is that kind of key time where people start to settle into their lives and look at buying property. Now, as realtors, and me being a real estate agent for the last 15 years as well, I want to say 1, 2, 3 years ago, if millennials were the biggest joke. Don't waste your time with them. They're just living in their parents' basement. They've got too much college debt. This group is going to be huge, and there is plenty of that 4.8 million, that has enough money to buy houses in every part of the country that they're living in. So this is a lot of buyers coming up, which again goes back to why we're not going to potentially see prices dropping very significantly. So this is a key point to share with your buyers and sellers, that we have the biggest group of potential home buyers coming into the market, which will drive up prices and keep competition strong. This is, as I said, this is their prime buying year, 27 to 33. It's the biggest demographic that we've seen ever. So it's huge. This is, again, it's a big opportunity. It means that we will have transactions happening over the next 3 to 5 years on a regular basis, because we have a lot of new people coming into the market. Then you have, your same baby boomers, Gen X, that are still, buying up and downsizing. So a lot going on here. So Dr. Lawrence Young, he is from NAR. First-time home buyers increased 34% last year. Now, this doesn't always mean it's entry level. It just means that it's the first time they bought a house. Most of the time ever, a lot of times that can, in mortgage terms, that could be in the last 3 to 4 years. So this is good. It means more people are buying, which means we have more clients to work with. This is a huge one for California. This study is showing that 70% of U.S. homeowners will be Hispanic. This is U.S., but it's also 70%. And we live in a state that already has a large group of Hispanic residents. So this is really good for California, especially here in San Diego. This means that this group of people is going to be buying houses, which is great. So we have millennials coming onto the market, a lot of them. We have a group of residents that already, it takes up a large portion of our community in the Hispanic community buying. So these are both huge opportunities for us. Maybe it's something you want to start thinking about changing and shifting your marketing, your message, that, potentially if you've been considering learning Spanish, this might be that, the thing that pushes you over the edge to start doing it more. Again, more about the Hispanic population. Let's look. All right, so vacancy rates. We talked about this just shortly. The new construction, they can't keep up with demand. So what that means is they're also not only just building new construction homes, they're building apartments, because you've got to live somewhere. So vacancies are super low, rents are going up much higher than everything else. So look at this from Redfin. The average monthly rent price rose 14% year over year to $1,800. This is probably a 2-bedroom, 2-bath type of property, maybe a 3-2. But this is crazy. I mean, $1,800. My mortgage for my 1,200 square foot property is only a few $100s more than this. And again, I own it. So is that example relevant to your clients today? Probably not, but it definitely makes you think, okay, if I could afford another $600-700, I could own this property, so definitely a key talking point. And because housing isn't keeping up with demand, people are going to have to rent. There's just no way around it. Let's go here. All right. So apartments, as I just said, 221, 446,000 apartment buildings or units were built. The most since 1990. So that's 20 years ago, they're saying, that we built that when they ever came out this much. So basically, they're saying that this is what they're having to do to solve these problems. People see it. Rents are up nationwide. It's just crazy. So year over year growth was fastest, since June of 1982. That's what, 30, 40 years ago that we saw anything like this happen. So, okay. So Omicron, the quick on this is we saw a huge spike. It affected things. It's still affecting a lot of the supply chain. That's affecting the economy, everything else. But what they have seen from their reports, and they get a lot more data than we see through the media, that they saw a huge spike and they believe it's dropping to a point where it's going to go down a lot to almost nothing. So, the basically saying that, the Omicron concern is part of the uncertainty with why inflation has rose. But they do think that, the willingness to get back to work will increase as we work through this, which is in the coming months. So they're hoping that helps the supply chain keep up. And they're talking here about, just everything. But, as soon as we get a handle on the virus, supply chains will loosen up and we'll see prices stabilize. I don't know if that's so true, but so cases jumped in February, and they're planning to. We've seen this already. They're lifting state mask mandates, but this is the big thing that they kind of shared. This is the spike that we just saw, and this is, it's probably floating right around here. This huge spike is nothing, which is crazy. This just happened. This huge spike, January 21. This is when we got locked down. So locked down back here. This was way worse, but we had control over it. So we're getting control of what's going on here. Doesn't matter where you sit on the fence with this or not. All right, so they've added 467,000 new jobs. Hard to say what that means exactly. This is crazy. 1.2 million jobs in the last 2 months. So we're seeing, basically this is a reason why they think they can raise interest rates. Maybe, maybe not. All right. So again, I said this is all pretty current. So they were talking about this right when this started happening. And, we thought that this Russia-Ukraine situation would pause rates, but it really hasn't. It might have for a day or two, but I get updates and it seems like rates are changing once or twice a day. Now, if your client is quoted a 3.9% rate, in the morning and in the evening, it might have changed by 3.95, 4.0. It's not changing dramatically in that scenario. And over the next 2, 3, 4 days, it could go down. It could, it could stabilize, but they're changing dramatically. So this is short-term labor is a big reason why we're having construction issues. Let me just scan through here. So new construction in 2022 should increase 3.2%. Again, this is nationwide. You know, this would be great, 3.2, and they're saying 3.7 would be healthy, you know, average growth. So they're currently on track to try and keep up, is what they're saying. But you know, with labor shortages, with supply chain issues, they're having huge problems. You know, so but here's one of the things that we talk about a lot in this industry. If mortgage rates do rise, it could cause, you know, housing demand and prices to, you know, level out a little bit. You know, you might have a property on the market a little bit more. Now, I'm in San Diego in California. I know you guys, a lot of you guys are across California. It might be a little bit different, but we're still seeing, you know, offers coming in the double digits, you know. So if rates, in my opinion, is as rates climb a little bit, especially where they're at right now in the fours, it's not going to change double digit offers on nice properties. There's definitely going to be a different batch of those buyers that those offers are coming from, and there could be a loss. There could be people that do get, you know, fall out of the market because rates change and they don't qualify any longer, or they're looking for a smaller, less expensive house. But I don't believe it's going to change our, you know, current sales in our trajectory. Lumber prices jumped up. This is a huge problem with, this is talking about why we don't have more affordable housing being built. Lumber's been up. We've probably seen this in the news a lot. They think they'll decline a little bit, but they're probably not going to change too much. Let me find this new construction. Okay, this is the beginning of it. So a big piece of this is the cost of building a house has just gone up. They're saying, and right here they're talking about around 19%. But here's a great breakdown of why we don't have low income housing, because this number at the bottom, we'll start here, 256K to start. 100, that means it's 144 grand on average to get a lot, 94 grand to pass and you know, follow regulations. And then lumber is, this number is up, 18.6 is a higher. So basically, to build a single property, it's 56%, you know, higher than it was. So that's why we're seeing more properties being built and priced in that higher end, you know, price point, because the builder has to make money, because their raw costs start somewhere, and they've got to build a property that now averages that out. So by, you know, just at 18.6 grand for labor to build a 1,200 square foot house versus spending, say, you know, another 10 grand, 28 grand in wood to build a 3,500 square foot house and use some, you know, nicer amenities and fixtures that you can sell for, you know, $200,000-$300,000 more. Now they're making profit again. So that's kind of why we're seeing this problem. You know, windows have gone up 20%. You know, every house needs that. You know, so this is a big issue. This is talking about what I mentioned is the lack of resale inventory combined with the strong consumer demand is, you know, boosting the need for single family homes, and which is what drove up that rate that chart that we saw, that, you know, anything above 50 was confidence building by the builders. So, you know, these two things together just prove that why that instead of at 50, they're all in 70s and 80s, because it's a great time. As I said, if they can build a house it's like printing money. And this is what this is saying, that, as I mentioned, since 2008, we've been undersupplied nationally over 5 million houses. So that's what, 14 years shy of, with 5 million houses every year being short. There's no wonder we're having an inventory shortage right now. And they can't keep up. And we're seeing, even just here in California, new construction, they're now delivering houses without appliances sometimes, which is, that's part of the contract, so that's a big issue. So this is they're kind of hitting on inflation now. So big issue with inflation is they're saying that they believe that it's limited area and the pressure is downward, meaning that, again, this is reinforcing that dropping from 7 to 4%. So the Treasury Secretary is saying that inflation rates will return to normal in the second half of 2022. As I said, we might be in the worst of it right now, and then we're just starting to see a couple of bits of information about towards the end of the year. So, this is when what she's saying is we might be down in that 3-4 range for inflation towards the second half of the year. Elliot Eisenberg, okay. High inflation, the Fed's planning to raise short-term rates by at least 1%. What this means, this sounds scary, short-term rates. That doesn't mean like the rates that we're getting offered for mortgages today. Short-term rates are rates that you would get they're talking about credit card rates, car loan rates, short-term credit, revolving type credit. That type of interest is going to rise. It's not connected to mortgage as we would think. But this plays into affordability. So it's still something to watch, but we're not specifically talking about mortgage rates right here. Again, the Fed Chair Powell, thinks that, he expects inflation will move down significantly, as we said earlier in this slide, from 7 to maybe 3. And as the supply chain imbalances kind of come together. Again, tying things back together, you have, they had estimated from 7 to 3 for inflation. Part of that reason is COVID is getting under control, allowing workers to get back to work and help get the supply chain flowing much better, allowing products and availability of products to stabilize. Big thing. So this one doesn't matter. This is just about meetings. Again, what will happen in March? This was a big thing for rates, that they suggested that rates might go up, and this is actually mortgage rates. A 0.5 point in March. We saw at least that, so pretty accurate. But again, this is old news now. So they think that the Fed's tapering and rate hikes will indirectly reduce inflation. Inflation, this is a good one. Inflation is mainly being caused by supply chain constraints. The Fed's action will slow the economy. Supply chain inflation issues should dissipate. The Fed does not want demand-based inflation or wages to spiral out of control. The rate hikes are designed to reduce inflation and enemy. And this talks about boom, boom. Let's see, consider Americans. So still talking about moving, construction, renovations, and upgrades. So we're seeing, again, this is a little bit more mortgage. So this was a thing suggesting that, for you guys as realtors, if your clients aren't moving right now, there's a good chance that they might do renovations and upgrades. I have a project happening right now that they could start. It could get loud right here. They're redoing some cement for us, and my wife will never move, so we're always doing little upgrades. But they're saying that the good news is your clients. Here's an opportunity for you to talk to your clients again. If they're not ready to move, help them find services and upgrade and workers to get those things done. Because if you help them right now stay in their house and improve their quality of life. They're going to remember you. And when they do sell, their house is going to be in better condition, able for them to make sell at a higher price, which allows you to make a higher commission. So again, even though your clients aren't buying or selling potentially, stay involved with them, help them through this stuff. Help if you push them to me and I can get them into you know, a refi so they can pull cash out. Now you've got yourself and me tag teaming this client for you. So when they do decide to sell, because they will sooner or later, we can push them back to you and you get a new listing, you get a new client. So again, this is still super important. Let's see, Fed hikes and short-term rates. Again, we talked about that. So this one is talking about partial how the US dollar is playing in some of the things that they're doing with rates and things. They believe that they are keeping our dollar strong for being able to use it in the world economy, buying imports and things like that. So 30-year fixed mortgage, we think at 3.7 by the third quarter of 2022, reaching 4% by the end of 2022. So rates are, you know, basically this one, the Mortgage Bank Association is saying rates are going to be up, you know, remain low by historic standards. And when they say, you know, if they're suggesting 4% right now for a potential rate this year, which we're at now, that is definitely still historically low. Our parents probably had 18% mortgages. So, they think home purchases will make up 75% of the market by the end of 2023. So 75% of our mortgages that we're pushing out, again, this is talking to me, is going to be new home purchase. That's huge for you guys. That's a lot of business for real estate agents. So as you know, this is when you want to, you know, reach out, have those meetings with lenders, create those situations. And you know what, no matter what the ratio of referrals back and forth between realtors and lenders, it's probably 10-1 because the buyer doesn't really want a real estate agent. They don't want a mortgage either. They want a house. And so the way that most people tend to get introduced into the service providers, it often starts at the real estate agent, you know. But me as a lender in this scenario, if I know 75% of my loan applications are new purchase, there's a lot of those of that 75% that's going to be a client buying that's not attached to a realtor yet. And you know, a lot of us, I remember when I was just a real estate agent that I always assumed that, oh, my lender is just going to give it to one of the big guys who, and it's you know, some top agent in your territory. And that's absolutely not true. Those guys, those top agents usually work with one or two lenders and very tightly, and their businesses really combined together, you know. And so why I say that is by you having better lender relationships, it definitely keeps the door open to you getting referral business from lenders. It is important. We don't have as many opportunities, I think, as you do, but we do need to refer that business to somebody. So if you're keeping in contact with your group of LOs, there's a good chance that is a income source for you. All right, so Logan Matashami, you guys do it. We're kind of getting to the end here. So 10-year yield and mortgage rates, the forecast for 2022, they think it's going to jump, you know. And if you look at these numbers, this is almost you know, 3 times. So the upper end range of mortgage rates, he thinks 3.375 to 3.65. We've already blown that out of the water. The lower end, 2.375, 2.50. This is the beginning of the probably the good news. This is he's referencing where he believes we might be by the end of the year. back down here. Same thing here. Projected 3.7%. We're already there right now. This thing said that, home prices could rise 5.7%. Again, we saw 13 and 22, 5% nationwide. For California, this still means, 12, 15, 18%, if this is the nationwide number. So we've got interest rates at 3.7%, basically going up 1%, but we're still seeing estimations of probably, high single to low double-digit increases in home values, meaning this is still a great time to buy if your clients can afford the mortgage that they will get today. All right, so kind of blew through that. As I said, I'm happy to go over this with you individually. If you have specific questions, you can shoot me an email. I'm going to go ahead and give this back to Anaheed, and I'll put my email and contact information in the chat box for you guys.
Okay, thank you, Andrew. That was really great information that you shared with us. So perfect. So let me go ahead and share my screen. Let's see which one it is. Okay, can you guys see that? You guys should be able to see the back end system or back office. And let's pull this up. Okay, perfect. Okay, for all of you that might not know me, I'm Anaheed Satarian. I am the office operation manager, and I am going to show you a little bit of Markful. And just to show you guys where you can get access to Markful, it's also on our back end office. So if you guys want to go, or if you're looking for it, go to marketing supplies, and Markful is going to be right down here in the drop down, and basically you'll come to the page. Basically, Markful is a branding store, so that we have provided for you guys as our agents, and you can basically go there and purchase all your branded products. I wanted to show you guys this because I don't think the majority of you guys know about it, that we have. We just got this, I want to say in the beginning of the year. So, but you could go on here and order your guys' business cards, signage, apparel. There is name tags as well. There is car magnets, note cards, letterheads, envelopes, pens, and nameplates provided for you guys. I want to see if I could make this a little bit bigger so that way you guys can see it better. Okay, there we go. So yeah, we do have all your business essentials in here that you might need, branded essentials. So as I said, you can go on here, create a free account. It doesn't take that long to just create an account, maybe like 2 seconds or something like that to create it. Oh, this is not working, but you could get on here, create it. You could go to markful.com as well. Just look for the company name. When you go on there, pull up the company name. Let me see if I could go to the first page. You know what? Let me get on a different mark. Okay, so can you guys see this screen? Andrew, can you guys see this? I don't know if you're on, but let me try this. Okay. Perfect. Okay, perfect. Thank you. So when you come to Markful, you just you could create your account right here. Get started as a new customer. It won't take that long. Probably, as I said, 2 seconds, or 2 minutes to create it. And then later you can go to your shop, basically start searching for your company. Search for Rise Realty in here and it should pop up. And once you click on Rise Realty, you would come to our page again. We have it already set in the back end home, office home for you guys, but you could go directly there or just go to markful.com. We do, as I said, we do have all your branded essentials from business cards. It's already designed for you. You just have to get in there and just plug it in. Plug in your information basically, and reasonable pricing too. You can upload your own design as well if you have any. Maybe you've created a card on Canva or somewhere else. You can upload it in here. And I believe they do take PDF, PNG, and JPEG files. So create your own design through there, as well as you could do that with signage. I believe signage, and then basically majority of everything. We will be putting some of our business cards that we've designed into here as well from our office back end. And but you can go through here, pick out what you want. Let's see, let's go back. They have different signage stuff. They also have sign accessories if you need it. They do have marketing magnets as well. So if you need like notepads or envelopes, anything basically, seasonal marketing. So if you want to send your clients some baseball schedule, magnet, notepads, they have it all here as well. Great way to brand yourself. So they do have yard sign panels, directional and open house signs, sign frames, and accessories and writers for you guys. They do have reasonable pricing as well for the signage. Again, you can upload your own design in here depending on what template you want to do and the size. I also want to show you at the very bottom, they do have those little fun signage that you could have used for you when you have a closing, or in escrow or something with your clients, so you can customize these. I just ordered a key for my clients from our closings. Yeah. And then let's see what else. As I said, they have accessories for your signs. So whatever you need, you could go through here and find out frames and accessories. We do have apparel on here. So if you guys are looking for apparel as well, they do have hats, bags, and more, jackets, backpacks, beanies, shirts, polos, cardigans, sweaters, bags. So they have everything you can order through here, and all reasonable as well. But any questions? Do you guys have any questions about Markful or anything? Let me know. We do have name badges as well. So I know you guys are out and about, maybe hosting open houses and stuff and looking for name badges. This is a great place to order it. You can basically it starts at two for $12. But you can order, I believe, 5 for $24. So which is not bad. Obviously, tax and shipping will be included in here. Turnaround time as well for the name badge usually takes, I want to say, a week to 2 weeks to get. Signage, they mentioned to me it takes 2 to 5 business days. So for signage, and as well as clothing, apparel. So note cards, we have seasonal note cards that you can send to your clients, maybe if they have a closing, or maybe an anniversary or holiday. Come on, I don't know why it's doing that. Let me refresh. Well, something happened to my computer. Oh, there we go. Just froze again. Let me try to go there. There we go. So you can add, they have ones with a photo on there, a note card. Obviously, you can upload your own design as well, maybe key day, closing. You could order those for your clients. You could do a custom text, birthdays, and then they do have holiday cards as well for clients. And I believe they're all blank inside. So that way you can go ahead and fill out what you need. But yeah, they have a lot of pretty great, great designs, New Year's, so, or just thinking of your clients or so. So yeah, please feel free to go shop on there. As I said, we do have all your branded essentials on here for you. Feel free to, explore it, and purchase from there if you need to. Again, it is on our back end online office under marketing supplies. And in the drop down, you'll see Markful. It should be the first one to pop up, and you can basically purchase through here, or go straight to the website at markful.com, and do your purchasing from there. So yeah, that's about it on my end. So let me go ahead and stop sharing. So I guess also just wanted to let you guys know too, since we're on here, I don't know if that you guys are aware, but we do have an Instagram page now up. Please go ahead and follow us. We'll be following you guys back as well. We are posting any open houses that you guys might have, new listings, closings. We will also be posting welcome new agents on there, and any trainings that we might be having as well, and so much more. So follow us on there. That way, in case you do have a listing or an open house, we can tag you guys on there. And obviously we also have our Facebook group, Facebook page too. So if you're new and you're not following us on there, please follow us on there. Other than that, I believe we will also be hosting these trainings also via Facebook Live. So every Monday and Wednesday, so you could tune in to our Facebook group. If you're not on there as well, we do have that. So so go ahead and add yourself to our private Facebook group, and we'll be hosting out there as well on these trainings via live. So you could just tune in on Facebook. You don't need to hop onto Zoom. Other than that, I guess that's about it. Again, I want to thank Andrew for coming on. That was really great information. And we will see you guys next next week, next Monday. So, and have a great weekend. So we'll see you guys. Bye.